Hello friends, let's start with business and financial market update. Digital gaming publisher Nazara Technologies has announced that two of its steps-down subsidiaries, Kidopi Inclusive and MediaWorks Inclusive, hold balance sheets at Silicon Valley Bank SVB, which is currently under the receivership of the Federal Deposit Insurance Corporation. The cash balances held at SVB by Kidopi Inclusive and MediaWorks cumulative account for $7.75 million, that is 64 crore rupees roughly. Kidopi Corporation is a 100% subsidiary of Paperboat Applications, which is owned 51.5% by Nazara. MediaWorks Incorporation is a 100% subsidiary of DataWorks Business Solutions, which is owned 33% by Nazara. FDIC has stated that it would issue an advance dividend to depositors within next week, with future payments coming as asset sales occurred. Nazara Technologies has reassured stakeholders that both subsidiaries continue to be well capitalized. Therefore, the company does not expect any impact on their day-to-day operations, business performance and growth plans due to SVB's events. Nazara Group, which includes Nazara Technologies and its subsidiaries, maintains healthy reserves of cash and cash equivalents in excess of Rs 600 crore, including the SVB impacted funds. Moving on, fintech startup EnKash expects to break even in the next 2 to 3 years as it currently focuses on investments into the business rather than profitability, according to the co-founder Hemant Vishnoi. There will always be investment into products and technology. You have to do some kinds of inorganic growth also over a period of time. The decision would be build versus buy with the organization. So essentially, those are the long-term investments which we are making right now. That is where the majority of money is getting invested, and that is why around 2 to 3 years in the timeline we are looking at break-even, Vishnoi said. Vishnoi co-founded EnKash in 2018 with Naveen Bindal and Yasvinder Tyagi. The startup is currently one of the fastest growing all-in-one spends management and corporate card companies in India. Customers of the startup are mostly the upper segment of MSMEs. Its typical customers are either medium-sized enterprises or emerging large corporates who face the most challenges of managing cash flows. Effectively, as our business is growing, we need to have some investment space in the business itself rather than focusing on profitability. As of now, I don't think that would be the right approach, otherwise it will slow down your growth, Vishnoi said when asked about the break-even. The company is currently operating at an annualized run rate of $3 billion of spends through its platform. It is planning to grow 3 times by the next financial year. Moving on, after witnessing the withdrawal of funds in the last 3 months, Gold Exchange Traded Fund, that is ETFs, attracted a net flow of Rs 165 crore in February, mainly due to slight correction in yellow gold metal prices. This was in comparison to a net outflow of Rs 199 crore registered in January and 273 crore in December and 195 crore in November. Prior to that, gold ETFs attracted Rs 147 crore in October, data from the Association of Mutual Funds in India showed. Despite witnessing outflows across most markets, gold ETFs in India witnessed inflows in February. This was largely backed by a small correction in local gold prices. The demand for ETFs largely arises when there is a correction in prices, Kavita Krishnan, senior analyst, manager research, Morningstar India said. The demand for the physical gold in India is largely driven by festival and wedding season, she added. Also, the segment saw an increase in the number of folios by around 20,000 to 46.95 lakh during the period under review. Moving on, SaaS firm Freshworks has said it has minimal exposure to the current Silicon Valley Bank situation. We do not foresee any disruption to our employees or customers, it said. It added that it is working with customers and vendors who were using its SVB account to move to alternate bank accounts. Moving on, Adani Group is likely to sell a stake in its cement business, with Australia-listed and Florida-based investment firm GQG Partners being one of the probable buyers. The Hindu business line cited sources as saying. The report also mentioned that more fundraising of around $1.7 billion will take place before March end. GQG had bought shares for Rs 15,446 crore in Adani Group companies. Moving on, the RBI mandated 3-year lock-in period imposed on Yes Bank's individual investors and exchange-traded fund is ending on Monday. Yes Bank shares are likely to face selling pressure due to lock-in periods end, according to analysts. They expect the SBI-led 9 banks, which picked up almost 49% of Yes Bank shares in March 2020, to sell their stakes. Thanks for watching this video. Stay tuned with Financial Pulse for business and financial market updates.